Good morning, folks. This is Naeem Azam, Chief Market Analyst at Trade, and welcome to our daily technical analysis video. In today's segment, we are going to talk about Brexit and its influence on sterling. This is quite essential because sterling has moved higher against the dollar and, of course, against the euro as well. Before we conduct anything further, it is important for us to go through this slide of disclaimers and risk warnings. Anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. So let's begin by looking at the MT4 platform. As always, we will begin the analysis by looking at the daily chart. From the daily chart, it is pretty clear that the price is in battle with this pink line. What is this pink line? That is the big question. This particular line right over here, this represents the 50-day average price for sterling against the dollar. The one in orange is your 100 days average price, and then followed by that is your 200-day average price. Now, of course, these three different lines are also known as moving averages because they represent your average price for a specific time period. So this pink one, we can classify this as your 50-day simple moving average. Then the orange one will be classified as your 100-day simple moving average. Followed by that is your 200-day simple moving average. Now, in order for you to put these moving averages on your chart, doesn't matter whatever the time frame is, all you have to do is go over here, click Insert Indicators, Trend, and then your moving averages. So the moment that you click on moving averages from here, where it says period, you can change that to 50, to 100, and then to 200. M&A method remains simple, and then you can change the colors as you like, or you can just follow the one that I have. So by looking at the price right now, the biggest thing which kind of really stands out, as I've mentioned earlier, is the battle of the price with this 50-day moving average. Clearly, on Friday, the price closed well above this 50-day moving average, and earlier today, the price was also trading above this particular moving average. Now, as long as the price stays above this moving average, the path of the least resistance for sterling against the dollar remains to the upside. Now, why this is quite important? This could be one of your questions on your mind. I mean, why are we looking at sterling? Because Boris Johnson, who's the Prime Minister for the UK, he had a call with French President Emmanuel Macron yesterday, and the conversations were about Brexit and to find a way to break the deadlock in Brexit negotiations. Now, he's also expected to speak with Angela Merkel, the German Chancellor, this week, and he is looking for ways to have some sort of a clarity on a Brexit deal. And they wanted to have this before the EU summit, which is taking place on Thursday. So in very simple language, what it really means is that the volatility for sterling is really likely to remain higher or really high this particular week against all the G10 currencies. So this is why when we look at the sterling dollar on the daily time frame, what we're looking at is the price action against this 50-day moving average. If we see Boris Johnson having some sort of a deal, some sort of a positive sign with respect to Brexit, this sterling is really going to move higher, which means pound will increase against the dollar, pound will also increase against the euro and against other major currencies as well. So that means how high, the next question comes, that how high can it really go if it continues its journey? For me, the next important level is right over here, is the level where we see the price let me just draw that trend line for you. That particular price level is right over here in around 1.32, let's say 25. In around this level, this is where I expect this price to move. But of course, the question remains that why do we put our stop losses? So one potential area of the stop loss could be right on the top of these candles. So let's just say in around 1.29, 87 or 80 could be your stop loss, and as long as the price stays above this one, you can continue to, you can keep your position in, and you don't have to worry too much until the price reaches this resistance area. So let me mark them on the chart for you so that you can see where exactly these levels will be. So if we can say that this is your resistance, and this right over here will be your support. Oops. So right over here, let me just zoom out a bit. It's not doing that what I kind of wanted to do. So let's just form those areas once again by choosing a slightly different matrix this time. So what we're going to do is we're going to keep our resistance right over here, as I mentioned, and our support zone, which is your potential, stop loss, or let's just say, where if the price drops below that, then it is going to be right over here. So I'm going to draw these price levels and on the chart, as you can see. So this is your support, right? So let me just maximize this a little bit more. And this remains your support, and this one right over here remains your resistance. So when we say support, what we really mean by that is the area that you wanted to put your stop losses just under this particular line, because you can enter right now because the price is in battle with its 50-day moving average. Alternatively, what one can also do is go into a smaller time frame, because this is what your daily time frame is. So what we can potentially do is also go into our smaller time frame, which is your 4-hour time frame, and then put your stop losses just over here, right where I'm going to draw my trend line, which is going to be just below your 50-day moving average. Because if the price drops below the 50-day moving average on your 4-hour time frame, and especially your 200-day moving average, which is right over here, it will really indicate that this price is going to move to the downside. So once again, I'm going to draw these price levels by using the lines over here. So right over here, so that remains your potential stop, and on your daily time frame, that is just where we had our initial stop was right over here. This is the area that we picked up, and on your 4-hour time frame, that is just below your 200-day moving average, and on your daily time frame, that is just on top of these particular candles. But if you really wanted to play safe and you wanted to give yourself a little bit more room, then what you want to do is you want to put your stop loss just below this 50-day moving average, and on your daily time frame, that is the area at 1.2924, and then let the price continue, let the price play out, let this trade do what it wants to do, because right now the opportunity is right over here to go long, and this remains your resistance zone. So once again, to summarize everything, what we're looking at with the opportunity is that one can go long right here, right now. Put your stop losses below this particular trend line, which is at 1.2924, and then you may want it to target at 1.3254, which is your resistance on your daily time frame, right around this particular price level. All right, folks, that's all for today, and I'll speak to you guys tomorrow.